Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Bull versus Bear webinar here. Steve Miley on the call for Trade Day on Tuesday, the 3rd of June, 2025. Welcome, everyone. Welcome to the Trade Day team. We're going to go through, I'm going to kind of mix up a little bit. First day, I've been away on vacation. First day back. I know Duncan covered yesterday, but the site was also down yesterday as we launched into the multiple accounts. So if you haven't seen, there are multiple accounts. We haven't had a really big push on it and emailed out yet because we just wanted to do a soft launch yesterday. But the site was down during the webinar. So, but it was the webinar did go up once the site came back up. As a recording. So Duncan did do the more of the weekly outlook yesterday, but I'm going to kind of do a little bit of that today, not as much depth as usual. So we'll sort of do a little bit of the weekly outlook today, but more focus on the daily outlook, because I know Duncan did cover that yesterday, and some of you guys come on regularly, so I don't want to be doing the same thing over and over again. So just to confirm, for those who are on live with me now, you can see the screen and you can hear me okay. If I can just get a yes to that, that would be useful, just to make sure everything looks good. All looks good from my side, but I just wanted to confirm on that, seeing as I've been away from the desk for just over a week. So yeah, if you can let me know if I can get a yes in the messages that you can hear and see everything all okay, that would be great. So let's have a look first of all. We're going to look back before we look forward. So just looking at yesterday's data in here. So we did get both the HCOB and S&P Global PMI data, manufacturing PMI data for global data, and also the ISM data in here for the US. So for yesterday's, for the European data, you can see most of it in here is in green. For the Eurozone, France, Germany, also for the UK as well, and then go to the US data in here for both the S&P Global data, which we see up here, and for the ISM data. It was actually worse than expected, so slightly worse than expected, but the market didn't seem to react particularly negatively to that yesterday. If we also then just scoot forward, Powell was on the wires, by the way. Nothing really new from there, nothing really jolted markets. And the main piece of data from the overnights actually was we had this Caixin manufacturing PMI data for China, which is particularly negative in here. So if we jump to the article here, China's private factory gauge plunges to weakest since 2022. So a real negative number out of China, and not only was it negative, but it was also below the expectations. So so that's definitely negative on the global stage in here on the data front, but not really impacting too much into the US indices. And then looking into today, nothing really huge today, although we do get the JOLT report. That's the job openings report. It's not a massive piece of data. It doesn't usually significantly move markets, but that is coming in today at 10 o'clock Eastern time, so watching out for that. The other piece of data from this morning was the European CPI inflation data. Now, really interestingly here, this was a preliminary piece of data for May, so it's a very recent piece of data. So it's an important piece of data for us. The forecast was for 2%, which is for the headline data, which is bang on the ECB's forecast rate, their target rate, excuse me. But it actually came in at 1.9%, so below the target rate. So that is really a potential for the ECB to be more aggressive with rate cuts. So that does open the door to potential rate cuts in here in the Eurozone from the ECB. So that's a real positive piece of data in here on the global fight against inflation. And I say this afternoon we get the jobs report coming up in here. And then the other thing just on the calendar side, actually, so here we see Eurozone inflation eases below ECB target, supporting rate cut bets. So that's a real positive. The other piece of I wanted to note in here, just on while we're looking at the calendars, is we look at the Bank of, while we're talking about the ECB cutting rates, we'll have a quick look at the fact that we have this month we have the Fed in play again. So the 17th and 18th, so just over 2 weeks in here, we have the Fed in play. With the announcement coming on the Wednesday, obviously on the 18th. of the month in here. So that's just over 2 weeks away in here. And remember, though, the Fed go on blackout period a week and a half before that. So this is the last week. If you look at here on the calendar, see they go on blackout on the 7th, which is this weekend coming. So this is the last week we get. So we only have today through Friday for the Fed, for any Fed speakers to be able to comment on monetary policy. So please be aware of that the Fed are going to go quiet as of after this Friday. So that's an important thing to know as well on the calendars. Just I'm saying I'm not going to spend a long time on this. So I know Duncan went through this yesterday on the Monday's more bigger weekly outlook, but I know I say that the site was down, so you couldn't watch it live. So any traders who couldn't watch that live at the time, please bear with me. Sorry, any traders who couldn't watch it live at the time, but any of those you did watch it on the catch up, because it did get posted, the webinar that Duncan did, who watched it in the members area after, not live, then my apologies. But I'm just going to quickly run through. So last week was a choppy week, lots of ups and downs. It's been very choppy in here the whole time I've been off in here, just the last week and a half, 2 weeks now. Market's very much in a holding pattern, a larger sideways holding pattern, and that's because of confusion around tariffs on, tariffs off, extra tariffs going on, tariffs being paused. Talks going well, talks not going well. So lots of confusion around that. But on the actual data side, we did get NVIDIA, which was stronger than expected. That was bullish. And US inflation, just like the European inflation, according to the Fed's preferred gauge, the PCE data, was dropping towards, was better than expected. That was a real positive as well in here. And then looking into this week, Friday's US jobs report, POW in here. And we can quickly run through the week. So yesterday we've already gone through the PMI data. We've had the US CPI data. We've got the jobs report today in here. Global services and composite PMI data tomorrow. Bank of Canada tomorrow as well. ECB rate decision on Thursday. And then really the big focus is going to be on the US jobs report coming up US jobs report coming up in here. Sorry about that. US jobs report coming up here on Friday. So that's going to be the big focus of the week. Moving on to the major news wires, and we'll start off with the Bloomberg newsletter Morning Briefing Americas in here. So this is a positive on the news wires this morning. Trump team pushes for a call with Xi as trade tensions simmer. So Donald Trump and Xi Jinping, the Chinese president, probably speak this week to try to get over stalled trade talks in here. Main sticking point is basically critical minerals, with US officials claiming Beijing hasn't sped up exports needed for cutting-edge electronics. So that's certainly a positive. The other thing of note in here that I picked up on was this, and I popped it out in here. As trade war run was on, some on Wall Street are gaming out how to take advantage of the wild tariff-related sell-offs and rallies. According to Nomura, betting against S&P 500 futures every time Trump escalated his rhetoric, so selling, and then buying back 5 days later would have yielded 12% since the beginning of February in today. So there's a little pop-out article on here, which I'm just going to share with you. So in here, so Wall Street games how to profit from Trump. It's exactly what I said there. Nothing really more to add. I'm going to share this one if you do have access to Bloomberg or shares, because I think it's quite interesting. Just how to go around about profiting from from the various ups and downs we've seen over the last, or since February really, but particularly when we get the sort of negative announcement, you basically sell, then 5 days later buy back, and that's been the best strategy so far in here, according to this Nomura study. So what else do I have for you? Trump team pushing for Xi call as trade tensions simmer. So that's just a pop out of that article there in here that we just mentioned. So that will be something to watch out for this week, because that could be a real positive. US futures actually fall. Actually, OECD later, earlier on today, OECD cuts global growth outlook, some negatives around the global economy. So that's the OECD publishing that in here this morning. So that's a slight negative. Shares called just $6 as trade concerns consist? Well, we know that anyway. US stock futures dip as investors await trade negotiations. Again, waiting for maybe some further information on that. But overall, global stocks are near record highs. So US not quite there yet, but global stocks are near record highs. Remember, the US slightly underperforming because of the US being the epicenter of the trade, the war. And so the US kind of still underperforming slightly. We've obviously had a significant sell-off this year and also a significant recovery, but not quite at their highs in here. But global stock indices are near record highs. Looking at markets in here this morning, the Nikkei pretty much unchanged on global markets. In Asia, first of all, Nikkei pretty much unchanged. Hang Seng, despite that negative data we have, up 1.5% in here on the overnight. European exchanges are fairly quiet around the bourses in Europe. So UK FTSE's up was up 0.15%, German DAX up 0.18%, and the French CAC down 0.22% going into today. And US stock futures in here slightly lower, going into today with about 0.25% down on the S&P and 0.15% on the NASDAQ. Taking a look at the FedWatch talks, we haven't been here for a little while in here. So pretty much, as I mentioned earlier there, going back to the Fed meeting is in 2 weeks, 1 day in here. So in 2 weeks time on a Wednesday, just over 2 weeks, 1 day, 2 weeks and 1 day. Sorry, going to the wrong page in here, but go for the FedWatch talks. So no change expected at that meeting. And if we jump to the July meeting as well, pretty much assured that we're not going to get a change there. 75% no chance of a change there. All bets really on the September cut. So we're looking at only a 28% chance in here that we don't have rates unchanged by September. So we're 72% chance in here that we have a rate cut at the September meeting. And then if we zoom further on in here, the next cut either October or December in here, but pretty much you're betting that we will get another rate cut by December, but only one more by December, potentially up to two. There's only, 27, about a 33% chance we get a total of 3 rate cuts by the end of the year, so 2 more after the expected September cut. So market's pretty much pricing in either an October or December cut, and only one more, so another 25 basis points after a 25 basis points cut in September. On the yield side, though, you can see yields been chopping sideways and have been reluctant to really push significantly above this yield peak that we saw back from April, and have been very much in this sideways holding. So this is the 10-year, but most of the charts are looking similar. We'll come to the charts shortly, but this is a yield chart. So markets oscillating between here like 4.38% up to the highs up here on the 10-year at 4.53% in here. But you can see here a couple of times now we've been down to this 4.3839% level. Now, if we can get below there, this is almost like a head and shoulders top. You can see like a shoulder here, a head here, and a shoulder here. So this is like a head and shoulders top on yield. So it's a yield top, which will be a low on prices. A lower yield, if we break down below this kind of neckline we have running around 4.39, 4.38%, if we can get down below that on the 10-year yield, that could open up significant risk, lowering yields, which should be supportive and positive for stocks. And if we go and look at our analysis across the yields in here, 30-year, 20-year, 10-year, in here we see this yield bottom. We've already turned bullish on price. Okay, so not a yield bottom, a price bottom, yield top, price bottom. So here we're seeing the yield top going in, and here we see the price bottom. So we did get a significant sell-off back lower in here on the 30-year Treasury bond yesterday. But you can see previously we reversed both these down trend lines in here. So that's a bullish, signaling a base, a bullish reversal, and looking for higher prices. But if we look at the 10-year in here, not so much of a setback in here. And obviously we're back in here higher in price this morning. As we said, higher in price, lower in yields. So yields going back lower this morning. That's this morning's data, which we don't have here. Prices are back up in here for the US 10-year future. So we've got almost already completed on the future. Not only reversed this down trend line that comes down from April, but we've also got this kind of inverse head and shoulders in price. So inverse head and shoulders. And we've already reversed the neckline on the inverse head and shoulders on the price chart. Haven't really quite done it because we moved above that 110.23 level already. So in here, the futures price is already completed the inverse head and shoulders base and does look more bullish. So looking for higher prices, lower yield. And it's a similar story, more bullish here even on the shorter end, on the 5-year in the belly of the curve, and also on the very short end on the 2-year. So this base in here that we've got in here does point to higher prices across the yield curve, 2s, 5s, 10s and 30s. and that should be supportive of stocks. Stocks remain in this kind of bullish holding pattern here. So S&P 500 and the Nasdaq in here, both in sideways holding patterns, even though they're reversed down through the trend lines we have in here, and I've got those on when we come to the Trader Bait charts in a second. Even though we've reversed down through the trend lines, markets looking bullish in here. And if we go to those charts in here, you can see we have reversed these trend lines. There's the all those trend lines on the ES, on the S&P, and similarly on the Nasdaq in here, we reversed down through all of those trend lines. I just pull this one out a little bit further, but you can see we're down through all those trend lines. But what's important for me here is we've broken all these various trend lines in here, and the one going all the way back here to April. But the market hasn't taken advantage of that. The bears haven't seized these bearish reversals of all these trend lines in here over the last couple of weeks in here that we've been in this big chop sideways. The market hasn't been able to take advantage of breaking these trend lines. The bears haven't stepped in and pushed the market lower. And for me, that's a bullish signal. When the bears don't take advantage of a bearish signal, then the bears are losing out to the bulls, and the bulls will be happy the fact that we've broken the support, but we've managed to stay bullish, and market's ticking back up higher in here. And if we look at these on the daily chart, you can see the market's been really chopping sideways now for up to really could argue 3 weeks in here. Only last week we made another new intraday high and then set back. We had the failure candlestick in here last week, and the market didn't capitulate lower. So we've also been breaching this 13-period EMA on both the ES and the Nasdaq. We see playing with that 13-period EMA on the daily chart, and the market still hasn't gone negative. So for me, this is bullish. We had a positive day yesterday. Market's kind of holding in marking time today, and I do think pointing higher. So on the charts for me, all still looks bullish going into the day. The real focus going into the day is going to be that JOLTS report in here. I've gone to the wrong one in here. In the JOLTS report, remember JOLTS report at 10 o'clock Eastern time today. We're going to be watching for that. So keep an eye out for the JOLTS report, 10 o'clock Eastern time today. Also get factory orders at the same time, but really the focus on the JOLTS report. And then in the news, further news we might have, obviously, tariffs have been the order of the day. Keeping an eye on tariffs, keeping an eye particularly on any news on this, on the, where is it? That's not the one I wanted. In here, this call between Trump and Z, any positive outcomes, any kind of signals that's going ahead, anything that seems positive on that front, that could lift markets significantly as well. So I'm remaining bullish on the technicals, but the macro backdrop is starting to look more positive too. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. Don't forget to check out, if you're interested, multiple accounts now live. We'll have the soft launch went well yesterday. We're going to have the hard launch today. You'll be receiving emails. So go and purchase. You can buy up to 3 accounts in total. So at any one time, you can have 3 accounts, whether they're evaluation funded or funded sim accounts. So you can only have a total of 3 accounts at any one time. That will be subject to change, given that we're all happy with our risk parameters here at Trader. We're cautious. We move forward slowly, so we're protecting our risk and we're protecting your risk there. Therefore, so we're probably going to allow more accounts going forward at some point. But at the moment, 3 accounts in total across evaluations and funded sim accounts. Enjoy. Hopefully, some of you will be interested in that, and have a great trading day. Take care. Stay safe. Bye.